reporting live from the Money Mantra, and we are back with another Forex education video. I created my channel to help as many people as possible become independent and profitable traders. So if that sounds like you are in the right place at the right time. So welcome or welcome back to my channel. If this is your first time here, I just encourage you to explore all of the videos that I have because there's so much content for you to catch up on. And I cover a lot of different topics that I've noticed that beginners tend to struggle with. But if you have any questions or you don't see the type of video that you're looking for, but you like my trading style, you can just leave a comment below this video or on any post on my community tab, and I will definitely add it to my queue and make it in the future. Now, in today's quick video, we are going to be doing a trade breakdown. If you've been here before, you know this is one of the most common types of videos that I post simply because I'm trading often, which gives me a lot of different content to make. I can explain what my thought process is when I take these trades and how the trades actually play out. So in today's trade, we're going to be looking at a gold trade from August 3rd, 2025, and it was for a sell. Typically, when I share trade ideas in my community, I will use this format. I just like to keep it simple. I told them I was looking for sells on gold down to 33220, and I gave them some sell stops and TPs that they could target. I always encourage people to check their own charts and to only enter trades that align with their process and with their analysis. Because while copy trading is cool when the person you're copying is profitable, it's not always that way. So instead of taking your anger out on someone else, you can just learn to trade on your own and make sure that you cross-reference what you know and the process that you follow before you enter any trades or put any money on the line. So I posted this trade on August 3rd, and it was around 8:20 p.m. Eastern Standard Time. So we're going to actually head over to my trading view chart. We're going to look at this trade a little bit more in depth, and we're going to see how it actually played out. So I'm going to come to tradingview.com. I'm going to make sure that I'm on the correct asset, which is XAUUSD or gold. I'm going to use my calendar feature at the bottom of my screen. I'm going to go to August 3rd, and I'm going to go to that time we saw, which was around 8:20 p.m. So let's go here. This is the closest one. We're going to click go to. It's going to point out that candle for us. Let me do it again, guys, because I had it on the 1 minute chart, and we don't want to do that. The initial trade idea was posted on the hour time frame. So let's keep everything the same. And I like to just walk you guys through this process because what I've noticed in my trading journey is that it's important to have a process, right? When I was first starting out trading, I didn't really have a process. I didn't have a confirmation checklist. I was just kind of coming in here, and if the market looked like it was going down, I was just simply entering for a sell or a buy, and I wasn't really considering anything else. So this is where the market was when I took my trade. And let's go ahead and add my indicator back. If you want to add this indicator to your chart or any other indicators on TradingView, you just want to click the indicators tab and search for what you're looking for. So I'm looking for the stochastic, which is my favorite indicator, and we can see that it has appeared on my chart. Now, the first thing that I do when I am about to look for a trade idea is I like to mark up previous areas of support and resistance. This is extremely important because the market is always going up and down. I tell you guys this in almost every video. And although it can be going up for some time, eventually it will hit an area of resistance and start to sell, just like when the market has been going down for some time, right? Eventually it will hit an area of support and start to sell. Now, the reason why it's important to mark these levels is because the market is consistently going up and down, it has a high chance at repeating or revisiting previous levels that it's been before. So the first thing you want to start by doing is identifying these levels. Now, They will be easy to identify because for a sell, again, it will look like the market was going up with a lot of energy and momentum, and then there was a hard stop. So I'm just going to go and highlight some other areas of resistance on my chart, and I want you guys to let me know if you can see them or not. So here is an area of resistance. We can see that the market hit this area and then it started to come down. Here is a area of resistance. It hit it and it started to come down, right? And it doesn't mean that the market will be selling forever. And most of the times, it's usually just selling back down to an area of support. So if you guys understand resistance and knowing that it's at the top of a trend and the market pushes down, just go ahead and drop some sevens in the chat. And on the other side, you'll find these areas of support that happen after some time of selling. The market is coming back down to a certain level to see if it wants to continue to sell or if it's time to buy now. So areas of support are where you will want to take your buy opportunities. Now, before we even decide if we're going to buy or sell, we just want to mark up these levels. Because if the market is selling, most likely it's only going to push back down to a previous level that it's been before, right? Let's just look at this small section for a bit, and we can see how the market was kind of stuck in the channel for a while, right? It was buying and selling at the same place, which is a little bit predictable. And that's what we want to look for in our trades. We want the market to be a little bit predictable, but we first have to start by identifying where it's been so we can determine where it is going. So I'm just marking up these previous levels of support and resistance because at this point, we don't know which way the market is going to go. So that's step one. It's the first thing I do in every single trade. The next thing that I do is I like to look for which side of the market has the most momentum. Now, momentum lets you know how much energy is behind that trade and if it's going to continue to buy or sell. Now, the way that you will recognize momentum is you will see a series of candles that are the same color going in the same direction. So what I mean by this is we can see if we look at this small area, not only was it at an area of support, right? But we also see that we have strong blue candles or long blue candles with larger bodies, letting us know that the momentum was high for the buyers. Now, when we come to this and the market starts to move sideways, we can see that the blue candles are actually getting smaller while the red candles are getting bigger and the momentum has switched to the side of the sellers. So when you are doing your analysis or when I do my analysis, I like to look at which side has the most momentum. Here's another great example of the market being at an area of support with the buyers picking up momentum. Here we can see that the red candles are small, the blue candles are getting bigger, and vice versa. Here we can see we have two strong blue candles, but then the blue candles start to get smaller and the red candles start to pick up steam, confirming the selling trend. So you want to see who has the momentum so you can determine which way you're going to enter your trade. Now, if you are new to trading or you still haven't found a process that works, this is one that you can copy, right? You can have a checklist for the buyers or sellers. You can count the confirmations on each side, and whichever side has the strongest confirmations, that is the way you want to enter your trade. So right here, it looks like the blue candles were running out of momentum and the red candles were picking up momentum. You want to look for at least three candles in a series to confirm that. Now here, I only had two, but I am going to go ahead and give it to the sellers. So we've marked up our support and resistance. We've determined which side has the most momentum for now. And now we're going to take our indicator into consideration. This is the third and final step that I do for all of my trades. If you have other indicators on your chart, you want to make sure that you have questions that align with why that indicator is on your chart. You don't just want to have it there because if you have too many indicators, you can get confused by the signals that are being sent. Now, for the stochastic, you'll notice that when it's facing up and the blue line is on top, we will see that the buyers usually have control and the momentum is high. When you see that the stochastic is facing down and the orange line is on top, you'll notice that the market is selling and the sellers have a lot of momentum. So I can see that my stochastic was facing down and the orange line was on top. So that's again going to be two confirmations for the sellers. So although I have my confirmation checklist, I do specifically like to wait for entry signals. And for me, my entry signals are if the stochastic crosses below 80, that's usually a great time to enter. And when the stochastic crosses above 20, that's usually a great time to enter as well. Crossing below 80, that's usually a great sell opportunity. We can just look at a few examples here where we can see that the stochastic crossed below 80. It was facing down and the orange line was on top. And in each of these examples, we can see that the market actually sold. On the other hand, when we see that the market has crossed above 20 and the blue line is on top and it's facing up, that is usually an opportunity to buy. So far, let's just put our checklist back here. I can see that I had one, two, three sell signals. I could have waited for an additional red candle here to confirm that the sellers had momentum. And I could have also waited for the stochastic to actually cross below 80 because that is a stronger entry signal for me. But I didn't wait. I decided that now would be a good time to enter this trade. Another thing that I didn't consider in this trade was waiting for the break of structure. Now, remember how we said that the market could be stuck in a channel where we can clearly see the support and resistance. And if you guys can see that the market will sometimes just be moving sideways or consolidating in a channel, just go ahead and give this video a thumbs up so I know that you're following along. If you notice that the market is consolidating or moving sideways, you want to wait for a break of structure above or below this to confirm the actual direction of the market. So here we can see it was going up and down. On this side, we have a break of structure to the downside, meaning it came out of this flow and decided to go down on top of the stochastic crossing below 80 and facing down. That was a great sell opportunity. Now, if we look on the other side, we can see that the market was consolidating here for some time, but then we have the break of structure here on the upside. It broke out of this flow. We also have our buy confirmations on the stochastic, and then we get this buying momentum. Now, what we want to see is the break of structure on the downside or upside, and then the stochastic crossing down or up in order to confirm that this is a strong trade. But like I said, this is where I decided to take the trade based on my three confirmations. If you've been following me, you know I like to say three confirmations are good, four confirmations are great, five confirmations are fantastic. So this was a C plus trade, and we're going to go ahead and see how it played out. So I can see that the market actually did not continue to have momentum on the sell side. I only had those two candles instead of the three. I also never got my break of structure on the downside or my cross on the stochastic. So this trade actually hit stop loss. But when I was looking back at it, I wasn't really surprised because I didn't have all of my confirmations. I did follow my process, but I entered the trade a little bit early and it caused me to lose money. Now, if we look here, we can see that the market was consolidating, right? We have that break of structure here. we have that positive cross, and that is why the market continued to push up. So again, I'm just going to hit play so that you guys can see how the market reacts around these previous levels of support and resistance, and for you to pay attention to the stochastic as well, right? Pay attention to the stochastic so that you can learn how to use these indicators and follow a process. So, unfortunately, this trade did hit stop loss, but I wasn't really disappointed. I had a pretty awesome trading month in July where we took no losses, so a loss was inevitable. And also, if I had just been a little bit more thorough and patient with this trade, I am sure that it would have been profitable. But if you've made it this far in the video and you've learned something, just go ahead and give the video a thumbs up. And if you want to see more videos like this, feel free to subscribe to the channel and turn on the notification bell so that you never miss when I post. I'm always looking to connect with new people and to help them get even further in their trading journeys. So if you guys are interested in connecting with me outside of YouTube, I do have a trading community that you can join for free for 7 days. And if you need more help than that, then there are other options available. But that's really all I have for you guys today. Pay attention to the community tab. I post daily inspiration and share some of my favorite older videos because I'm always trying to help as many people as I can and just reach you guys in different ways. So just look out for the next video. Until next time, rich friends.